Nvidia earnings are tomorrow. There's a lot of questions to be answered. Is AI in a bubble? Is the circular spending justified? Is Nvidia really just another Cisco, one of the biggest companies that crashed and burned during the dot-com bubble? Let's simplify these earnings to one number. The only thing, well, obviously there's a lot to pay attention to, but the only thing that really matters to move the stock in the positive or negative direction is this number right here, $61.77 billion. Let's talk about why this number matters so much. Let's talk about the technicals. What has Nvidia price action been doing? What have the big players been doing? Because a lot has been changing over the past couple weeks. And finally, what does history tell us about Nvidia during earnings? It's really simple. Nvidia is now down over 15% from its all-time high, which it hit during that big GTC conference, you know, the Super Bowl of AI, as Jensen Huang likes to call it, where he announced this number right here. Nvidia expects to see $500 billion of AI revenue through the end of 2025 and through all of 2026. This right here, this $500 billion is so absurdly large and so far above the estimates of what any single human being could have predicted. These orders cover current Blackwell GPUs and their next generation platform Rubin Ultra GPUs and other AI infrastructure. Now, of course, when a company comes out and says something like that, projecting revenue basically 50 to 100% higher than any analyst estimate out there over the coming year, over 2026. As you might imagine, that's what causes a stock to basically go straight up. But now we're on the precipice of worrying about AI valuations. Are stocks getting ahead of themselves? Is this revenue sustainable? Sure, Nvidia can project this growth into 2026 because the AI infrastructure build-out is accelerating. For example, we have Theo, one of the most respected tech investors that exists on this planet, selling literally his whole stake in Nvidia, 537,000 shares worth approximately $100 million. Is that a bellwether of things to come? We have SoftBank selling also their whole stake in Nvidia in October, raising about $5.8 billion to invest in other opportunities, OpenAI. And then, of course, you know, we have Michael Burry, the god of shorting the market. He has never been wrong. He revealed a $186 million short on Nvidia. So obviously there's a lot of selling pressure from some particularly big investors, some interesting investors to at least pay attention to. And so, yeah, I think we can all agree that that's a whole lot of selling pressure. What was that? 2 million to 3 million plus shares that were just completely dumped onto the open market. That's going to cause some serious downward pressure. But like we just mentioned, there's really only one number that matters that we should be paying attention to. It's this one. $61.7 billion. Now, why is this so important? Well, the argument right now is that everybody's getting to the point where they have their Nvidia chips. Do we really need to keep buying Nvidia stuff if the accuracy of our models are basically going like this? Horizontally, is the chase from, you know, a 90% model to a 100% model, at least on this MMLU benchmark? Is it worth OpenAI investing, you know, $30 to $50 billion for every $10 billion that Nvidia gives to OpenAI? That's a tough question to answer. OpenAI thinks they're going to get to AGI just by spending more on chip infrastructure. If you have more chips, the more likely we are to reach AGI. I'm not so sure that's the case because at the end of the day, current AI is just pattern recognition, doesn't know anything about English, anything about mathematics. It's just about predicting the next most likely token based on a bunch of previous tokens. So is that ever going to really lead us to AGI? Again, that's just ambiguous and not entirely defined on its own right now, but it seems like we need another breakthrough. Like we saw with the ChatGPT moment, this massive step up in accuracy, in utility, the actual usefulness of the models that we're using on a day-to-day basis. It seems like to get to AGI, we're going to need something like that. And that begs the question, do we need to continue spending hundreds of billions to $500 billion on Nvidia Infrastructure, well, in the early stages, absolutely. Every hyperscaler company, think your big tech, think your Amazon, your Microsoft, your Meta. These companies, if they want to have the most premier and straight up best models, then they're going to need to spend a whole lot of money up front to build out this infrastructure. And we're seeing this everywhere, right? It's not just the big tech companies. These companies are all teaming up together. They're teaming up with some of the biggest sovereign wealth funds that exist on the planet. Literally the biggest asset manager on the planet with BlackRock, over 13.1 trillion in assets. And so, yeah, it's obvious. If you want to have really, really good AI models, you're going to have to buy a lot of AI infrastructure from Nvidia, the best AI infrastructure for a variety of reasons. We go through their competitive moat and all sorts of detail in this video here if you're interested. But at the end of the day, we need to see these Mag 7 companies continue to spend a lot of money on capital investment. And based on Jensen Huang's recent claim of that $500 billion of revenue into the end of 2025 all the way through 2026, just right now, clearly the CapEx is there. And it's actually pretty transparent what Nvidia should report tomorrow. If we do some really basic math here, we just saw Jensen Huang talk about $500 billion in revenue over the next 5 quarters, just about. This one included the one that we're going to hear about tomorrow, and then the next 4. If this is any sort of correct, then that would mean Nvidia just in the calendar year 2026, is going to have visibility into roughly $440 billion. Almost $500 billion in revenue over just 2026. Now, again, if we look at some of the estimates for the current year, for the next year, 440 billion is quite laughable, right? I mean, we're talking like 50 to 100% higher than what some people think. So yeah, this could be absolutely blockbuster. Now, can they sustain growth like this? I mean, probably not, but I guess nobody really knows, right? We're talking just averaged out over the 2026 year, $110 billion per quarter on average. And we all know this could change with a blink of an eye, right? Because we just saw with a company that you may be familiar with at this point, CoreWeave, they just dropped over 20% because they reported that, hey, we have a bottleneck in our supply chain here, in our manufacturing build out. You know, we want to get all this AI cloud compute capacity up and ready to go for whoever wants to use it, for whoever wants to train their big scary AI models. But you know, they couldn't build it out fast enough. So we're going to have to delay some of that revenue and hence lower next year's annual forecast. Now, could that same exact thing happen to Nvidia? Yeah, of course. Jensen Huang could come out tomorrow and say, hey, that $500 billion of revenue we said we had, you know, like a month ago, well, yeah, we're seeing some bottlenecks and we're not going to be able to build that out as fast. And so we're going to have to defer that revenue to a later point in time. And does that really matter long term? Not at first glance, because they're just simply deferring that revenue to a later calendar year. But it does allow companies like your Amazons with AWS, Microsoft with Azure, Meta, Google, it allows these companies to be like, oh, hey, these Nvidia chips are pretty expensive. Maybe we could cut cost and try to manufacture some of this stuff on our own. Amazon and Google are actively building out their AI accelerator chips because they don't want to be spending $70,000 to $80,000 per Nvidia chip. Although Nvidia is the best overall system by a mile right now, companies are obviously going to look to cut cost where they can, especially if building out these data centers is more delayed than anticipated. That could ultimately lead to Nvidia facing some scrutiny about, hey, why would we buy chips for $70,000 to $80,000 a pop when we could start our own manufacturing line if you can't even get us these chips until 2027, 2028, 2029? You get the point. We just saw in 2025, Nvidia secured virtually all of TSMC's advanced packaging capacity. In other words, TSMC's entire business is pretty much Nvidia. And it doesn't stop there. Nvidia's demand, as we just saw, is so large, $500 billion over the next 5 quarters. We need you guys over at TSMC to come to America and build a plant that's going to employ over 7,000 people and produce about 240,000 systems Blackwell systems. And we all know the news cycle isn't slowing down either. So if there's some supply chain problems, if there's some supply side bottlenecks like we saw with CoreWeave, then meeting all this demand and being able to charge, these super premium prices, then it's a valid point. I mean, even today, we just saw Anthropic just agreed to buy something like $30 billion of Microsoft Azure computing platform capacity, and Nvidia's now working with Microsoft to optimize Anthropic's AI model workloads. So just this deal alone, Microsoft's going to have to spend a whole lot of money on Nvidia, and Nvidia is going to provide them the product to make Anthropic a whole lot more efficient and ideally compete with OpenAI so we don't have a straight up monopoly on the large language model market. Now, it's always important to keep in mind what has happened historically. We all know what's going on right now. There's a lot of people that want AI chips, that need AI chips to build out their AI infrastructure to train the best models and capture users as quickly as possible so they can lock them in and get that annually recurring revenue every single year. But what do the technicals tell us? How does Nvidia usually perform after earnings? Because it may surprise you. Just because Nvidia's beat earnings basically every single time over the past 5 to 7 years doesn't mean they always go straight up. If we look at Nvidia earnings, let's say from 2022 on, because really ChatGPT moment was what, middle 2022 to middle 2023, and we just play the earnings boom, right? We're gonna buy on the day of earnings and exit after one singular day to see how Nvidia usually performs, even if they're beating earnings basically every single time. So let's take a look, and this front end is more in its beta phase, so let's hop on over to this one where we have some more concrete data to look at. And you can see if you just traded, 15 total times since 2022, January 1st, 2022, you would have outperformed the entire S&P 500. If you just traded Nvidia earnings, that's all you did. You didn't hold Nvidia, you bought 15 times and you sold 15 times. You were in the market for 15 total days and you beat the S&P. So clearly there's some promise to this, and you can see total return over about 3 years, 54.9%, it's pretty solid. Biggest win, 24.4%. Biggest loss, 8.5%. Clearly the upside is more, not only likely, 60% win rate, 9 out of 15 times, but also much larger than any loss has been. Now, obviously, there's going to be volatility whenever you're trading a highly uncertain event like earnings, even though I'd argue it's actually pretty certain what's going to happen tomorrow. Yeah, you got to be careful, but it's just incredible to see an outperformance of the entire S&P 500 simply trading 15 days over the last 3 years and 9 months, just about. I mean, the Nvidia earnings trade over the last 7 years is the 5th most profitable trade on this entire website. That's absurd. And again, we've talked about how Wall Street is grossly underestimating Nvidia in a prior video and went through the details and the math behind it as to why it makes so much sense. But just imagine, I mean, we're talking about a PEG ratio on Nvidia, the largest company in the world and one of the fastest growing companies in the world, trading at a sub 1.2 PEG. In other words, this company is extremely cheap compared to how fast it's growing and how much revenue is anticipated in the near future. If this 500 billion number isn't just some ghost and comes to fruition, I mean, if we just bump up to a Microsoft PEG ratio, we're talking about $360 price target. Sounds absurd, but at this point, only God knows what's going to happen, let's be honest. And as Nvidia basically has a monopoly on the AI accelerator market, actually more so like the entire AI data center infrastructure market, margins are going to be very high. They can sell at basically any price point they want. So this 70 to 80 grand a chip, that's going to be looking pretty good 2026. So what do you think is going to happen tomorrow? There's a lot of uncertainty. I'd argue it's pretty certain, but at the end of the day, I want to hear what you're doing to prepare. What kind of positions do you have? Are you long? Are you short? Is this the end of the AI bubble if Nvidia is to disappoint heavily tomorrow? Or is it the beginning of the next phase? After all, Jensen Huang has told us that this is just the beginning. These are the early innings of the greatest industrial revolution the world has ever seen, artificial intelligence. And Nvidia is the epicenter of it all. And one last thing, if you're interested at all in getting a quantitative advantage in the market, not just YOLOing into options calls, not just buying and selling at random levels that you think look good or using those stupid lines on a chart, let me know, because I want to help people have an advantage, the same advantage that the street works with. The retail trader, the average person, doesn't have the data that they do, but what we can do is summarize it all together for you in one beautiful platform that helps you see what's working in the market right now. There's so much noise, there's so many indicators and crap out there, but if we can simplify it and make it nice and easy for you, then it will help you drastically in your trading. I can promise you that. So let me know if you're interested at all in this, and I can put you on the beta list. You'll be the first one to use it. Let me know. All right, that's it for me. If you're invested in Nvidia and looking forward to these earnings, subscribe. Thanks. Like the video too. All right. Bye-bye now. Bye-bye.